Alrighty, ladies and gentlemen, this is Blake Morrow. You are listening to The Morning Edge. And I know it says phase 2, but it's really The Morning Edge because this is where you're going to get your trading edge for the day, right? All right, so speaking of which, speaking of a little bit of an edge here, talking about the rallies on Mondays, and, it's a little too early to get too carried away with risk aversion. That was my opinion this morning. Stocks are very strong already. They were stronger than where they were on Friday. So you got to be, but here's the one thing I need to take a step back for a second. And good morning, Renelio, by the way. He said good morning. I was just saying good morning back. One of the things I want to talk about really quick is that that the dollar Mexican peso is holding up really well. This is the one thing that keeps suggesting to me that we are going to see some sort of risk aversion, but that doesn't mean that right now is that very moment in time. If you think about pre-market activity, think about this. Something historic happened over the weekend. If you guys weren't familiar with what happened, there's a stimulus package, $1.9 trillion package is probably going to be passed Tuesday, maybe at the end of this week when Biden ends up signing it, but it's going to get done. So we know it's getting done, and that's why the markets were up earlier, and that's why they're up now. If you're a retail investor and you don't really pay much attention to anything, you don't think about a whole lot of, you're just like, I just see what I just hear. I just, know what I hear in the news, and then that's it. And there's a lot of people out there that are going to be like, oh, look, a lot of money coming in. Every time we put more money into the markets continue to go higher, and blah, 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 blah. And, we're going to have this big stimulus. The market's going to have this big boom, blah, blah, blah. I want to buy everything. You just have a lot of orders coming in from over the weekend, and especially this weekend. So, you had futures that were down in Europe. If you think about where we're at in just a few hours ago, we've seen, about 1.5% rally in the S&P futures. Well, why? Because, you got a lot of North American traders coming in, and they're thinking the exact same thing. We're going to buy up risk. What happens after the market opens, we'll see. But there's just a lot of that going on. And by the way, if I'm yawning, you guys have to bear with me. It was one of those nights last night, I think, because it's warmer than normal here for this time of year. It's actually cooling off here again in the next couple of days. But man, last night was warm. It took me a while to fall asleep, like an hour. So I'm yawning this morning. So anyway, here's the S&P. So let's talk about the S&P for a moment. I do think we're going to have resistance up here. By the way, let me delete this. Let me get rid of that for a second. Okay. I do think we're in the middle of this megaphone pattern, but because we're in a megaphone pattern, I think we are pushing back down towards 3,600 eventually. That doesn't mean it's happening right now. Resistance today, let's figure out where this is. So this is the 78% retracement basically that held, right? I mean, that's going to be pretty big support. We are not heading, I don't think we're going to make it all the way down there today. I'd be surprised if we went back to the 618. So I'm going to actually write that down. 3780 is going to be support for the S&P. And then I think resistance here is going to be right. Let me just double check something really quick before we get too crazy. High to low. That's right. That's good. You can see the 618 comes right up here at 38.74. This trend line is going to be right around the same area. A little lower, but 38. I'm going to write down 3870 because it's the spike high right there. So 3870 is resistance. Interesting. And as you can see, we're range bound, right? So I think we will be coming into resistance pretty soon. You know, we got maybe another 35 S&P points. I should get up there. Okay. Let's take a look at the rest of the market. So the euro is trading really heavy. Obviously, you know, if you read this morning's analysis, 127% extension, we're there. Relative strength is now divergent. So I would think that the euro bounces around here. You know, what's going to happen is the euro sterling is going to end up bouncing like a bat out of hell, and it's going to piss me off because it did stop me out for break even this morning. But anyway, that's neither here nor there. All right, so the euro divergent relative strength, we just hit the 127% extension, so we could bounce. But while we're below 119.50, I would say we're even going to struggle on any move back to 119.30, because if you look here, this is the previous high, right? Spike high, breakout, that acted as support. Now you'll notice that it's acting as resistance on rallies. So that should be 119.30. It's going to be a good resistance, say. And we're bearish. Sorry. I know a lot of you guys are probably bullish the euro, but man, we're back below 119.50. We're back below 120. While we're below 120, I have a hard time being bullish. Cable. So the sterling's holding up pretty well, and dips down to 137.50 should be very well supported. We're at triangle resistance, which is intraday resistance is right here. But let's say the euro recovers back above 119. Entirely possible. It's entirely possible, right? Euro breaks back above 119, and that means that the sterling here is probably going to rally back towards 139.35. So, oh shoot, what did I do that for? Hold on. I'm sorry, I missed part of the euro. My bad. 137.50, and this
support is at 0, right?
Support's at 0. The Eurozone's going to 0. The euro is going to 0. You know, I wouldn't, you know, I mean, that was kind of like one of those, you know, the euro's going lower, right? Still, the euro's going to go lower because the whole market's long euros.
Yeah, the biggest, one of the biggest conviction trades across the banking sector, right, for 2021 was higher euro dollar.
Yeah, I read probably 19 bank analysis in December of last year.
You were saying it as well at the time. You were.
Yeah. I mean, look, I mean, the euro's, like I said, it's going to shake everybody out. I bet you we go to 115, gets everybody out, and then bounces. We're going to do one of these. Boop, boop, boop. Right? That would be my opinion, if I had to guess.
Yep, I agree.
Okay. So let me finish up with this analysis here. So sorry, I was just having a request from somebody that I gotta tend to in a little bit. All right, going back to analysis. Where's the euro? So the next stop on the euro, I mean, we could hit new lows, so I'm not gonna say that we can't. Problem is I don't see any real big supports here. I mean, like, that's 118. That's spike low right there. I mean, I can ride it. I don't think it's good support. Aussie. Okay. So the Aussie, now, while below, okay, you can see this support here. That's our flag. That's the flag bottom, right? So that means we shouldn't get back above here. All those little highs right there. Because if we get above those, that means then we are actually doing a false breakdown. Okay. What probably is going to happen here is it's going to look something like this. If I had to guess, it's going to look something like this. And so, you know, you probably want to just be selling rallies in the Aussie as it moves its way down. That's if I had to envision what's happening right now. Okay. So oops, let's get rid of this. So I think resistance, pretty key resistance going to be is at 77.20. And support intraday. Well, I mean, if we do break these lows from last week, which will be 76.20, then we're heading to 75.40. Hold on one second. Sorry, guys. Give me 1 second.
You found someone on Tinder. Tell us the truth.
I did. I did.
It was me.
I swiped up, and I don't know, Steve. I just
that was me, bro. That was me.
Huh?
That was me.
Oh, God, is that you? Hey,
yeah, probably you didn't recognize me because I had that pink bikini Stelios lent me.
Right. Hey, Steve. Jokes aside, I need a response from you on Skype. I had a request, so I need.
Sorry, bro. I didn't see it.
Yeah, no, that's fine. I'll finish up here. It has nothing to do with the markets, by the way.
Yeah.
Okay, so Kiwi. So this is a bearish wedge developing here, and even though this is a flag, and I can redraw this target. What I would be looking at right here is this. Okay, so you can see we're bear flagging, right? Looks like that. There's the, so we should have resistance at 71.50. I know it's not very far away, but support is at 71. Dollar Canadian. So dollar Canadian, most of you probably know I'm bullish and I'm long. So I'm just waiting for this inverted head and shoulder pattern to try to play out. And also the longer term wedge. Okay. But one of the reasons, in my opinion, has been that's kept this dollar Canadian lower or heavy is that crude oil has been so strong. So now that crude looks like we might get a reversal today, as long as stocks start to reverse now, if crude is reversing, then the dollar Canadian should be freed up to move higher. Support is going to be, I was like, where's my numbers? Okay, there we go. Support's going to be 126.20. Resistance is at 127.50. So 126.20. And by the way, this is bearish too. 127.50. That's key. I'm going to go back to the Kiwi really quick. These are bearish. Just want to make sure everybody knows Aussie's bearish, Kiwi's bearish until we complete these patterns. Okay. Dollar Swiss. Okay, so the Swissy is very strong. Obviously, this is a pretty key, and I want to show you. This is if you don't remember our conversation on Friday, okay, this is really important resistance here. This is a multi-year spike low. And like I said on Friday, I'm like, we may get up here, but I sure as hell wouldn't want to be long up here. That doesn't mean that it's not going to go higher. It's just from a risk reward standpoint, it's like, yeah, it's not my cup of tea. But that doesn't mean that it's going to stop. You know, you look at the euro is probably going to 115. That probably means the dollar Swiss is going back to 97 cents, maybe even higher, especially if yields continue higher. So the only thing we can do with a currency that looks like this is you either get on or get out of the way. So it's, you know, get on the train or get out of the way, right? This is a really strong move. So you just, you know, you're like, look, it's not my cup of tea, so I don't want to play it on the long side here. I get it. Don't. But anyway, while we're above 92.50, it's bullish. So next reason, this is 80 is where it was last time I looked, but 93.70. Okay. 93.70. I think that's pretty key resistance. This is bullish. 92.50 is support. Intraday. Okay. US dollar, Norwegian krona, nice little triangle developing here. That means this support at 151, 851. I guess it's 851. Okay, so let's do this. 851, 861, and then 868. I do think we ultimately have to break above 873, but if we break this resistance, I think that's going to be pretty big for the bulls. Okay. Yeah, I said big bulls, not big other things. Big bulls. It's big for the bulls.
Yeah.
Big bulls. Stelio's got some big bulls out in his backyard, right? That's what. Okay. Jane asked, has the dollar CNH bottomed? In my opinion, it looks like it has. I mean, look, this is one of the things. This is the other thing that's going to that's telling us that there's risk off. I mean, coming is the dollar CNH. That's just another thing that's saying it. Dollar MEX. Where do we go next? Spike high, 38% retracement, 21.94. That's big resistance. It's bullish. Support dips back down to the 200 DMA, which will be 18 or 21.18. That's bullish. This, as I was telling the guys and gals in the chat room, this particular trade has made my month thus far. I'm long a full size position at 20.85, so my average. So it's a Tony says Stelios has big silver bulls. That's right. Did you hear that, Stel?
Yeah, I got it.
That's loon to the max.
I like you, Tony. Yes, I know it is.
Dollar yen screaming. 88% retracement, spike high. I think that's going to be more important resistance. But look at this daily RSI. I mean, I don't know if we've been much higher than that. Oh yeah, we have. A lot higher. Wow.
Still,
go back to...
it shows that the rebound is, is strong, which says a lot.
Yeah, I mean, look at this. January 2000, was it 2013? Shoot, I mean, we had RSI up in the 90s. So I guess that means, obviously we could go higher, but man, you got to be a little careful here. Okay, so next resistance, the 88% retracements comes in at 109.10. Support, any dip back down to 108.20, people are going to be buying. So, but Steve's got some big silver bulls too out in the backyard.
Does he? Does he have a backyard?
I don't know.
Was that about me? Sorry, I missed it.
Yeah, you got some big bulls.
Unfortunately, not in the. Yeah, no, I don't have a backyard. I have them in the balcony.
Oh, that's odd.
Tell us exactly so we know where to find them.
Urban living. Urban living. You know what? I have to say, I'm not a big fan. I mean,
at least I don't have scorpions.
I don't have scorpions in my house anymore. That was
you had in the previous
scorpions are very territorial. So we lived for 5 years in a scorpion. They called it Scorpion Alley. I found out after the fact, after moving there. But living where we're at right now, we've been scorpion free, which is great. But they're very territorial. So just in our neighborhood, we could be without them, and you could walk 500 meters over to another neighborhood, and they could be prevalent there. So anyway, but what I'm saying is I really enjoy having a yard. I don't know if I could do urban living long term. I don't think.
No, I'm with you. And to be honest, one of the biggest reasons I miss not having a yard is because this way it makes it extremely hard to have a dog.
Yeah, that would be tough. I definitely wouldn't have 3 dogs. That be.
Yeah, because with both and my wife working a lot, etc. I mean, it's not necessarily the case that you can always take the dog out for a walk. If you have a yard, at least you can open the door, and let him do, what he has to do.
Yeah. I'm going to say, guys, well, we're above 9160. You have to be bullish dollar index now. There's just, that's near term. And that's it. And I mean, intraday, we could get a dip back down here. I mean, we are obviously overbought, but it's hard to say. It's hard to say where resistance is right now at this moment, especially if we get a little risk off. I mean, if we get a little risk off, the dollar is going straight to the 161% extension. And considering the fact that we just had this, you have this stimulus going through, everybody knows it. We might get to buy the rumor, sell the news. You might get, you could get a spike up there. I'm not going to rule it out. I'll write down 92.81. I know it's far and away and probably aren't going up there, but
never say never.
Yeah. I mean, you in the markets, just when you think you've never seen that before, it's happened. So it'll happen. So I don't get surprised. But dollar MEX is coming down. Dollar Norway is coming down. So, stocks are probably heading higher at this moment. So we'll see. Where are we as far as Bitcoin, silver, and gold? So here's silver. Silver is heavy. We are below that trend line. So this is bearish for silver. We're below the trend line, day 2 now of closing below. If we close down here, 200-day moving average comes in at 24, 161% extension comes in at 24.40. So I'm going to write both of those levels down. 24, 24.40, bearish near term, and resistance is 26. So while you're below 26, put an asterisk there. You have to be bearish. Gold. We just keep probing lower. This is the 618. To complete this AB equals CD, it takes us to 1675. And while you're below, this isn't going to be important. While you're below 1760, you have to remain bearish. This is important. It's right here. It's low, low, breakdown. So while you're below 1760, you have to remain bearish. Okay. Next, Bitcoin. Bitcoin back up at 52,000. So let's say we do it like we did last week. We challenge the upper side of this trend line, the underside of this trend line is what I meant to say. That's going to take us to 54, probably 54,000. So first resistance is at 52. Let's just call it 52.6. Is that your kids that I hear, Stelios?
Oh, yeah.
Not
Sorry.
mine. Not mine.
That's my son.
Oh,
Yeah,
okay.
sorry, I was unmuted.
I was like, man, the neighbor kids are loud today.
No, it's my son roaming around. He actually came to bring me some octopus that they just
nice.
Yeah.
Bring you some octopus?
Yeah. I mean,
Like,
you know, a cooked, baked one. Yeah.
Oh.
They just made a little bit.
My mom used to cook octopus, and then
Yeah.
then I'd throw up a little bit every time. All right, so I'm sure it tastes great.
Yeah, it is. It is.
All right, 49.5. Okay,
really?
so,
You don't like it?
no.
Have you tried it the Greek way, like
I would think,
grilled with olive oil and how do they bake it there?
oh, I forget. I mean, it's been so many years. All I remember is it just tasted rubbery. Anyway, that was me.
Yeah. It has a rubber feeling when you chew it, but yeah.
You can't say we're not diverse here at ForexAnalytix.
Yeah, no, that's
right?
great.
We talk about
Okay,
everything.
so hey guys, the bias chart's done. Stocks are rallying. We are moving higher. Keep that in mind. Steve, Stelios, it's all yours. So
thank you, sir.
all right,
Thank
guys.
you.
Good luck, everybody. And
okay, time to cover calamari issues.
Let me paste that onto the chat, and I am ready.
I love fresh squid, by the way.
Oh, I love everything from
it's
the sea.
amazing, isn't it?
Except sea urchin, which is I'm allergic to, but everything else I love. Okay.
Well, unfortunately, you brought in mind the joke about mermaids. You know that, right?
No, but let's not do that now.
Why
tell me in private.
Why are mermaids the most useless creature on the planet?
Why is that?
Because you can neither cook them or hug them.
All right. So, what did we talk about on Facebook? We talked about a few things. Obviously, you know, we did mention the stimulus package came through, was as the market expected, and it kind of didn't disappoint the market, but it was all priced in anyway. But we're seeing the usual Monday rally, and you know, see how far it goes. But you know, for me, the big picture hasn't changed yet. The only thing that's nagging me a little bit is yields, which are creeping higher, and you know, 10 years now hitting 160.
Yes.
I said last week, I said, you know, obviously, if you look at the big picture, 10-year yields were between 150 and 250 for a long time, and then COVID came, and we went down to 0.4.
Yeah, along with COVID, though, came a huge increase in debt, because that's also important.
Exactly. But you know, in terms of yield levels, you know, we're going back to where we were before. It's not the disaster. Obviously, you don't want the yield to spike quickly, but you know, going back to 2%. You know, shouldn't be a disaster, but I think the way debt has increased, it's gonna, you know, even 10 basis points are gonna start putting pressure on markets. You know, you go from 160 to 170, 170 to 180. You know, it's gonna put pressure on the market. It's not yet doing anything, but you know, you can feel that the market's a little bit nervous with yields going higher. But at the moment, S&P is up 0.5% again today. Who cares? Just buy everything and close your eyes. I'm still watching the market. I'm watching silver and gold. I've said in the chat room quite a few times. I have levels below to buy more.
Yeah, Stelio, I think this week actually, I'm gonna start dipping my toes in both silver and gold miners.
Yes.
Silver, I'm gonna be buying some physical, and gold miners probably through an ETF. But I think this week I'm gonna start getting some of both, with every intention to hold on and add even lower. I just don't want to get out of. I don't want to lose the opportunity and have no position if they reverse fast. You know what I mean?
Yeah, I'm with you. And there are ETFs. I like the junior silver miners ETF, SILJ. I look at that quite a bit, and it's very volatile. So
In Ingmar, I can actually get. I'm very lucky. I can get physical silver very cheaply. Cheaply meaning, with almost a zero spread, because one of my best friends, who, to be honest, it's a good idea. Now that I think about it, something, I'm going to bring one of my best friends for an interview one of these days, because he quit his job like a couple of months ago. He was for 13 and a half years a market maker in Netherlands. And, it was, 13 and a half years nonstop. He barely even took any vacations. He made very good money. He did very, very well. He went all the way up in the company, meaning, he started like from small desks, and he ended up being in the biggest desk, which is the S&P. He was there for the last 3-4 years. He made quite a lot of money, and now he's thinking of probably having a family with his girlfriend for like 15 years, and he wants to take it easier for a little while and trade for himself. So now that he's not in the business anymore, he can come on and give us some insight of how market making firms are actually
that would be very very interesting, actually.
Yes, because he's done that for 13 and a half years, and now that he's not in the firm, he can more freely, speak about, what they've been doing, how they've been doing it. So I think it's going to be quite interesting. And he's also an extremely, extremely smart guy. So why did I start this conversation? It started from elsewhere. Oh yeah, one of his friends, actually, they met when he was having his master's degree in Germany. He owns a company here in Greece that actually they give them like anything that has metals in it, and they melt it down, and like they extract, the precious metals. So I can directly buy from him, at a friend.
The question is though, what form do they sell it in? Because you want to have, the specific coins or the specific bars with the accreditation and everything.
No, it's okay. I don't mind, Stelio. I'll buy
okay.
like.
I'm just saying that when the time comes to sell them, people would always want to buy what's what has the right.
That's okay, because if I ever want to sell them, it's going to be 975 silver.
Yeah, okay,
I can just pay a little bit and validate it. You know what I mean?
I understand. I'm just saying what most people are looking for. But anyway, makes sense.
I can get it without paying any spread from him. He's a really nice guy. We know each other. He's a good friend of one of my best friends. So, we have a good rapport. So anyhow, that brought in mind that I should bring Dimitris in for an interview. Actually, I'm going to speak to him today and, make arrangements. Yeah, it's going to be interesting. Stelio, I want to start getting my hands on both of those, despite silver not looking really nice here. I mean, it has broken down from this ascending channel, and this probably points to, I would say,
theoretically 24 to start and maybe 22 afterwards. But
22 and a half.
Start somewhere,
22 and a half, very, very strong horizontal support area. I think we can easily make it there. I wouldn't even be surprised, to be honest.
19.
I wouldn't even be surprised if this produces. I mean, it's not my main case scenario, just to make it clear, right? But I wouldn't find it unlikely to even get a lower low in silver as well. I doubt it. I think it's rather a low probability scenario, but I wouldn't be surprised. I mean, even better, because as I said, I'm not going to be buying silver for the short run. I'm going to be buying it for the longer run, so I couldn't care less. Actually, I'll find like a good opportunity to, reduce my cost average. Yeah, I think in the short term, it looks heavy. Gold looks heavy as well in the short term. Watch out, by the way, gold is testing again this key confluence of supports here. So key area we have in essence stalled here. This is the third consecutive day. Platinum finds support in an equivalent channel, as you see, shorter term channel, but it has. I think that all of those eventually and sooner rather than later are going to explode higher. I think the turning point for the market having to do with the dollar and precious metals is going to be once the market realizes that the Fed and the rest of the central banks are going to mop up every single bond that's going to be coming out there to fund all these new stimulus plans, liabilities, infrastructure, call it whatever you want. So I think that's when those are going to fly higher once again. I've repeatedly talked about the technical part of the issue, which is that the moves lower have clearly corrective structure. Steve, can you look at ETH and nickel? Yeah, absolutely. Listen, nickel is like by far the worst looking of all the metals, right? Because first of all, it overthrew this channel, then literally collapsed and broke through it, back it again. And just look at the last 2 days. I mean, they're just inside days consolidating. I think we're not done. I think this move looks rather impulsive to me, which means there's more to it. So even a short-term rebound, I think it's going to be short-lived, and we should see more weakness before we can see higher prices. I don't doubt that nickel, as anything with intrinsic value, is going to end up going a lot higher as well, but it doesn't look like nickel is about to imminently do something like that. If I had to trade nickel in the short to medium term, I would be looking for opportunities to be short rather than long. So it looks worse than any other metal out there, if you're asking me. So be very, very careful if you're looking to buy it. I don't think you should be doing it yet. I think there's more to it, to the downside, probably decently more, I would say. You can see the impulsive nature of this structure, right? 1, 2, 3, probably one more leg lower, then perhaps a bigger rebound, then another leg lower. I would say we can easily go down, retest 1040, right? Easily within this bigger rebound. Now, having to do with Ethereum that you're asking, in my opinion, both Bitcoin and Ethereum, the likeliest scenario here that I see is that we're seeing, let me make it clear so it doesn't get misunderstood. We're seeing corrective rebounds within the corrective moves lower. What I'm saying here is that there is a good likelihood that the move lower is corrective, but within this correction, I think there is more to go. And the current rebound is just a correction in the short to medium term in the bigger correction that we are about to unfold. So Bitcoin looks to me like it's forming some kind of a pennant here. Ethereum looks like it's forming some kind of a flag. Look at Ethereum testing today, the 61.8. So I would have to say that in both cases, from a risk reward perspective, I think that being short in the short to medium term looks more appealing than being long. I doubt it that we can just ignore these, especially in Ethereum. We had quite an impulsive move lower. I doubt that we can completely erase it and go higher without creating at least somewhat of a more complex corrective move. Okay, so in the short to medium term, I think the path of least resistance is likely lower. I wouldn't find it at all unlikely to go back to 1,000 having to do with Ethereum. The Ethereum structure looks cleaner to me than the Bitcoin one. So if I were to trade one of the two, it would probably be Ethereum to the short side with a target of 1,000. Okay. USDCAD. I know that Blake answered it, but I've been, keeping close track to it. So just to give you my 50 cents on that as well, because I would mention it even if there was no question today. I was tracking it for a long period of time because we had this extremely strong downtrend. Then we had a clear divergence in momentum, and now we finally see a rebound higher. Now, two things I want to say here. First of all, this is a valid breakout higher. That's A. B, I think it's corrective. So don't keep your hopes very high that, like we're now headed to new highs or anything like that. I think that whatever is going to unfold here is going to be corrective, and I think that USDCAD is going to eventually continue on its way lower. 660 is a first area of interest to the upside from, going higher from here. So yeah, a valid breakout, but I wouldn't push my luck to the upside here for various reasons, fundamental and technical reasons. Okay. USD Turkish lira. Actually, yeah, I was looking at it like a couple of hours ago, because there is a decent chance that it has bottomed out. There it is. There is a decent chance that it has bottomed out, right? I mean, quite a nice move higher from here. You can definitely interpret this whole move lower. Let me go for a different color. As a big pennant. Let's see. Something like this. Right? So, yeah, I would be very, very, very careful being short here. The way we're rebounding could be impulsive, and don't forget, I need to keep reminding you, look at this multi-year trend, one of the best established trends in the Forex universe, right? So be very, very careful. This could have been a very decent, albeit corrective move. I had several areas of support, as I always do. As you see, it perfectly stopped when it found this one. So, yeah, I mean, the move higher looks quite strong to me. Next upside resistance, we're almost there, the 50% fib at 773. Let me see, more questions. Steve, the commodity stock DBC, let's have a look at it.
That's a Deutsche Bank ETF, from what I remember. No. Anyway, yeah.
Yeah, quite an impulsive move higher.
The problem with these is that they all they buy futures, right? So they actually try to mimic the
they have
to track commodities by using futures. I'm going to go and see their composition, but from what I remember, they do. So that's a little bit.
Yeah, that's nasty if that's the case.
But with oil up here, oil doesn't have much contango here. I don't think so. And I'm sure it's part of it. Let's see. I'm gonna check it now. So keep going, and I'll tell you what I find.
Yeah. So quite an impulsive move higher, right? Now short term, extremely overdone. There's no question about it. So you can't really buy it here. I mean, how can you buy it here? I mean, where would you put your stop loss? We can even see some very, very strong RSI divergence. Look at this. Right, very strong RSI divergence here in the short term. This new high came with a very big divergence. So let me see. We just got some data. US wholesales inventory, as expected, US wholesales month on month a lot higher than expected, 4.9 versus 1.4, and the previous revised higher as well to 1.9 versus 0.7. Do I believe it's going to make any difference? The answer is absolutely not. Let's move forward. So in my opinion, going back to this instrument,
and by the way, I was just reading, DBC does invest in like crude oil futures and gasoline and futures and all that. So they do quite a bit of futures. So we have to be careful.
So next area of resistance is this area up there. But to be fair with you, I can't find myself even considering buying something that has moved like this until it gets a proper corrective move lower, right? So, you know, it's one of these things that it's tough to be short, but on the other hand, it's really, you know, it's really unwise to be long here, right? That was the place to be long. I mean, such a clean corrective move here, right? Textbook. Pop, 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 pop. I mean, overlapping, slow, retraced, I would have to say, just by eyeballing it, something like the 38.2, and then exploded higher. There is more to go to this. Trust me, there is a lot more to go. But you need to find a better price to buy it. Okay, first area of support, roughly 16.5. Now, will it be enough? You know, it's not easy. I mean, it's a minor correction lower. It might prove to be enough if we continue higher from here and do something like this. You know what I mean? Then it might be enough. Okay, Stella, I think we covered more or less everything.
Yes, fantastic. Well done, Stephen. Thank you, everybody. And,
okay,
we will
so see you all
tomorrow.
later or tomorrow. Bye-bye.
Yes, thank you.